Remember the great inflation scare 10 years ago? That's something worth revisiting because there's a good chance that we'll see it again in the next year or so. A recent survey by fund managers shows that inflation is now a bigger threat to the bull market than COVID-19, the first time that investors have cited something more often than the pandemic. An all-time high net 93% of 220 respondents with a combined $630 billion in assets under management expect higher inflation over the coming year. However, U.S. Fed Chair Jerome Powell said on Tuesday that he did not think inflation will jump on Biden's $1.9 trillion spending package, and the reason planned to spend $3 trillion more on an infrastructure package. He said, and I quote, "We do expect that inflation to move up over the course of this year. Our best view is that the effect on inflation will neither be particularly large nor persistent. And if it does pick up in a more concerning way, we have the tools to deal with that." Powell is planning to keep interest rates at near zero till at least 2024, as inflation has been below 2% for a long time, and now he's okay to see it go above that level. For a long time, keeping inflation low was the priority for the U.S., but not anymore. Employment is now the top concern. Plus, raising interest rates put a lot of pressure on the U.S. The stimulus checks they're handing out are not free money. The U.S. government borrowed it, and their national debt is now sky high. If the Fed increases interest rate to curb inflation, paying interest on that debt gets really expensive. Therefore, a lot of politicians will pressure them not to do so. Some economists are worried about the spillover effect of U.S. massive stimulus packages to China, including the risks of imported inflation. In the near term, surge in prices of many commodities could raise production costs in China. And in the long run, these stimulus could lead to depreciation of the US dollar, which would affect the security of China's foreign reserves, making efforts to increase international use of the RMB even more important.